Hi, my name is Richard Rousseau, and I'm going to start to upload a few video clips on YouTube about the Wave Fractal. So this is the Wave Fractal part 1. I will explain within 5 minutes hopefully what a Wave Fractal is, but basically it's a wave within a wave within a wave that I've generated to help me to solve some of the unknown problems in Forex. And it turned out that this Wave Fractal has actually helped me solve very interesting problems to do with the atom and discoveries about how the world works and the universe. But that is why part 1 is only relevant to Forex and markets, where the others will be actually much more interested. I found the others are extremely interested, so that's just my plan for the future. But right now, as I said, I uploaded this proof that Forex is random earlier this year, and yes, I told you what as I experienced and observed the market. At that, I must agree, at that moment in time I had limited information, and I gave you what I have. So in this one, I've been studying randomness for much longer now, so I can give you a better picture. So what I'm going to do in this video clip is not try to take a side about randomness or whatever. I'm going to rather explain to you why things turned out the way it is, and actually I'm going to try to bring a bridge between the traders who believes it's tradable and the ones who believes it's not at all. So maybe this video, you can use the information here to get a better understanding of how markets work, and I don't think anyone has represented it in this way yet, so you should find it very interesting. Okay, so basically this one will override, I will fix my mistakes, some of the mistakes that I've made in the first one, but I'm not saying that you're gonna make a lot of money out of this. I'm just saying make up your own mind. Okay. Now, I first thought that I was the only person who discovered that markets are random, and afterwards I realized that there's been books written on it, theses, and a very short 5-minute video that I should think that everyone should see is this passive investment theory, the random walk. It basically says that you can't the best price to predict the future is the current price, and they take a scenario where a drunken guy walks, I don't know if it's over a field or from one place to another, and they say you can never determine where he's going to end up. Well, I just want to say, after I've studied randomness, I cannot tell you maybe where he's going to end up, but I can tell you something about the pattern where he's going to end up. Initially it will look like a random pattern, but if you observe it from the sky, and especially if he walks long, you will see it will be a wave within a wave. So typically he might fall 2 steps to the left and go a bit on, and then fall 1 to the right. So he basically will go up and down, and at closeness you would think it's random, but if you observed if you observe his random pattern, you will see there is some structure to it, and this is the purpose of my whole video. So guys, go look at this video. Just want to show another interesting one. This traders billions by the minute. It's a very interesting. It's almost like a life story that they went to traders, and they show you how they're trading. So it will give you a perspective of traders and how some are making it and some are struggling, and actually, just to give a bit more, I thought it was a realistic view about trading. But then I must say, and a lot of people has given me the arguments, how is it possible that some people are making money, and how can I say it's completely random? And yes, I have to agree with you guys. There is some people that are making money. But anyway, I'm going to take a different perspective here. So another very interesting video clip to watch. This one is long, and there's actually 2 episodes, I think, and it was of great interest to me. Then I just want to show this one, or trading markets random or predictable. This guy talks about, I think he's speaking to someone that they did some statistics on the market and found that it's completely, that's non-predictable. So, as I said, my purpose here is to show why sometimes when you look at markets, it seems to be have purpose and non-random, and other times. So I think I'm a step further where, as I say, I want to try to bridge the two. And I'm also going to show you mathematical calculations further on that basically prove, yes, statistically it comes to nothing, but yet there is opportunity. So you should find it quite interesting. Now this is an example of a typical fractal. This is not my wave fractal. I'm just showing you, for the people that doesn't know, it's a type of mathematical calculation that generates patterns, and it doesn't matter how you look at it. In the small, it regenerates the same patterns in a bigger time frames, like in Forex. So this gave me the idea to try to generate a fractal that's based on a wave formula. So yeah, I can show you a few pictures quickly, and then I'll maybe show you the real thing. Obviously, it just turned out that I had this idea to generate a wave fractal, and I thought it would work. I thought it would represent Forex, but I was actually or markets. I was actually quite amazed at how this thing represented the markets exactly. And what it does, it's my fractal is like looking at the markets, removing all the spikes, and you have patterns within patterns repeating, but in such a way you're moving in from the one into the next. And my idea was that to start doing statistical calculations. So my end goal with this would be, and I would probably need another year, is to by writing robots and things to test. I could test a certain strategy, for instance. Now, if you do a strategy on a normal market, the market changes all the time. So for me, this is like the average of all markets put together. But as you people know, the moment you put an average, you're losing the crisp. So the fractal gave me the opportunity to, let me just show you another picture here, right at the beginning. It starts with a wave. But as I said, I think it will be better if I could show you the real thing. So yes, if you look at here on the weekly, I just want to mention that my fractal is I haven't solved a fractal that will go forever and ever. I had to generate it for Forex over certain time frames. So my fractal will only work from a 1 minute, and it will stop at a weekly. And I do not have enough computer resources and memory, and Excel is not big enough so that I can generate any more. Even to do this, it took me days just to get the formulas calculated, copying and paste, because I keep on running out of memory. So yeah, on the outside you have a wave, and if I go to on daily, you actually zoomed in on this wave, and you will just see it generates Forex patterns. When I showed this fractal to my friend, who's also a lawyer, he told me I shouldn't show any of this to anyone, because someone can just copy this and it will tell them something about the markets they never knew. But I said the fractal is so complicated that from here you will have no idea really. Just like almost in markets, you can have prediction where it's going, but you know, you thought it's going up, it's going down. It is forming markets. Movements just like you will get in Forex, but now I can do some statistics on it, and I can analyze it. So that was my whole idea about it. Let me just show you. If you go to the 15 minutes, you know, but most importantly, I mean, if you look here at the 1 minute, you can try to predict this thing, and it just gave me a idea of how hard Forex really is, or any market to trade. Looking at it at this level, it is not easy to predict where this thing is going to go, because the waves are bending up and down, and you know, so I just wanted to show you guys this this fractal. And basically maybe that 1 minute, maybe everything that we've seen now are in a very small section. They are now concatenated into smaller sections. So yes, I'm going to first finish talking about randomness, because that was my big discovery, and then I'll show you some observation about this fractal. And what I also would like to know, has anyone else ever seen a fractal of a wave? Because for me, a wave is a very, very important thing. It tells you something about light and movement. And so I've tried to look on the internet for any fractal regarding a wave, and I just couldn't find any. So I was wondering how easy, if there's any mathematicians out there or whatever. I'm pretty sure they will look at this, and unfortunately, as I'm showing the detail and information, they will get an idea how to generate it. And if it is unique, I don't expect it to be unique at all. But at least if it is unique, I want to say that I was the first person to generate a fractal of a wave, or to publish it, and if I'm not, I've learned by now that whatever I thought I've generated and are unique, mostly hundreds of people has done it before. So yes, that's just a very interesting question to me. Has anyone generated this? And maybe by looking at this, they will get the idea and they will easily be able to generate it. Yes, I just want to mention that most of my pictures I got from Wikipedia. But let's go on. So let me just give you some background about this thing. As I say, it's purely created by maths, and it's based on the sin function. And obviously I had to do a couple of things to get it work. It took me months. Well, it didn't take that long. I had this idea. It took me months to generate the idea how to do it. But once I had the idea, actually my first test actually gave me a wave fractal. So I don't know if I must say I was very lucky, or if I just had an extremely great idea. So in these pictures, as I said, I've generated in about 2 million 1 minute candles. So obviously I took the wave fractal from Excel formulas, and I took the result and I converted it so it's compatible to my trading platform. I imported it, so every about 32 minutes is one wave, and there's 62,000 whatever 500 patterns. Your base patterns, I mean, you get all the patterns that you will get in Forex. There's nothing more, nothing less. It looks like the market, and that was what's so amazing about it, because now I can do something. And I've already told you, I did it because now I can prove certain patterns statistically if I have enough time. So hopefully in a year, I will either become the richest person in the world, or I will release my things freely. In which case, I've discovered that your statistics is still pretty low. Okay. So as I said, the study of randomness has led me to amazing discoveries and things that I didn't know before. And as I said, I think any trader should just be aware about it. And as I say, everything in here is my opinion. It's how I perceive it as a single person looking at it. I mean, the more minds you could put together, that you can probably, if I was a company studying randomness, I would probably achieved some answers sooner. Okay. So what I've tried to do was try to generate, as I showed in that previous video, it doesn't matter what random, if I take coin flipping or whatever, it just seemed to create patterns. So what I tried to do here, I almost had like three different let's call it randomness, not functions, but I reseeded, and so I generated smaller random things to sort of more represent Forex like it really is. So you get this, and that is about the same. I stop it at some parameters, so and then at some, let's say at the first morning announcements, I reseeded my randomizer and I let it generate bigger waves, and obviously here, and it might look very random. I'll just show you a couple of more random patterns. And if you start looking at these patterns, you will see that some of them actually represents typically what happens with the news announcement. The news is the market should go down, and because of the news, and it goes down, and suddenly the market decides, well, it's going to go against the news announcement. Now, as I say, I couldn't understand it, but it seems to be a typical thing about because even if when I studied how our markets reacts on news events, it is random. Even if the announcement is bigger or smaller. So let me just show you more patterns. This is another one. You can really see that even though it's pretty random, it's already generating a downward trend. And but in it, when you zoom in on the small, and maybe this will lead me to my ultimate answer about randomness that I will tell you now. But on the small scale, when you look at it, it's pretty random. But when you start looking at the bigger picture, it is starting to form a pattern. This is another example, as you can see in here. Many of these patterns that I've generated by pure maths and a randomizer start giving you Forex and market patterns. Now, I just want to say, I mean, if you look at this, if you are a trader, would you even consider trading a market that looks like this? And hopefully the answer is no. You would look for something that is more smoother, where there's not such a big difference between candles, because I mean, basically, if you're trading on this and you're expecting it to down or whatever, and you suddenly have this huge move down, and as you're selling here, it just turns against you. I believe that the odds will be better if you can trade something where, in general, the average size of your candles, and this is the answer, the trick here, that you should trade a market or a time frame where the more, and that's actually my conclusion, but I'll work you more up. I'll show you more examples. So even if you take this one, this was the amazing discovery, my first, that I couldn't understand about randomness, because I couldn't understand how is it possible that my random generator, and didn't matter what, I even used ask a friend to generate me random numbers, not through a Microsoft product, through another one which is supposed to be more random, and I almost found it impossible to generate random data that doesn't seem to form some pattern. And as you can clearly see, I mean, even randomness likes to jump up and down in certain areas. So I've drawn some pictures here, and you can clearly see that it was just odd that randomness does exactly what we see in the markets. It's like you get an up and a down, and then typically the market will come and it will test that support, and here it breaks it, and randomness seems to generate patterns. But if you look at the small, what I found, certain time frames, when you look at it and it looks to you like pure random, you just need to move your time frame a little bit, and you'll suddenly find that it's not. And that was the big discovery. And I will talk about a little bit about this, how it's applicable to life. But let me just show you more before I do that. So what I've done here, this section here, which seemed to be pretty random, although it already show you some rules. If you zoom out, that's that section there. And if you look at the big picture, even this fairly random candles start to form a trend. But if you are trading here and you don't see the future, the thing about it, you never know how long the trend is going. Another way of putting it, I now see markets in terms of waves, so it generates up and down waves, and the thing that you do not know is how high the wave is going to be, and what the frequency of the wave is going to be. And that's a problem with randomness and maybe even with any market and trading, is that you see a pattern, but you can never say how long that pattern is going to last before it changes into a new pattern. And this is just an example. These are like many candles and in randomness, and I think this was a coin flipping example where I just showed that it could generate years of, even in randomness, of just giving you a uptrend. And I say I found that very amazing, or I didn't expect that. So just to show you some more, I think this was like on a 4 hours. So we'll find periods in any time frame where you can consider this as consolidation. And if it seemed pretty random, as I'm going to show you now, if I don't know exactly where I zoomed, but somewhere in here I zoomed at various sections. I've zoomed. It doesn't matter where I go. So basically here, instead of going to a bigger time frame, I looked what will happen if I go to a smaller time frame. And what I found is what seems to be random in one time frame is generating a perfectly nice pattern in another. And that's the discovery that I've made, and I'm going to explain to you how I see it just now. So I started looking, for example, here. This is sound waves. If you play any music or something, and initially when it was small, like in my media player, I thought it's pretty just up down. It's consolidation, but if you start zooming a bit, you will really see that it's forming patterns like you will get in Forex, like a typical flag formation. You get a move, a consolidation, and a move that in this case is pretty much like that. But just to show you that I almost believe that it is going to be very hard to get a true randomizer. And even if you think you've discovered a true randomizer, that if you generate a couple of million of it and you observe it from other perspective, you will find that there's patterns in randomness. This is just another example of wave sounds, and this one I didn't even have to zoom that much, and you can see it is forming all the patterns that you will get. You get like a consolidation here. And I want you guys, I'll talk a little bit about consolidation, but even just looking at this is going to tell you a lot about Forex and markets, how it seemed to, you always find yourself on the wrongs, just as you think it's spiky, it's going up now, it's broken everything before it goes down, and things like that. Now, I just want to mention here something else, the life lesson that I've learned from studying randomness is maybe if you look at your life, it should be, it depends on what you believe and how you grew up. When I was younger, I believed that, for instance, let's say, or doing good things, it will always come back to you, and so you start to develop a certain belief system about your life. Most people, depending on what you believe, will tell you that they believe that life is not random, that there's a purpose to it. And for very long, I believe that too, and I believe if you like almost like pay it forward, if you always do good things will come back to you. And all I can say is, if you still believe that, then it's because you haven't you are too young. You just haven't experienced life. Because what you will find in life is that you do the right things, you follow the rules, and as I say, sometimes you get payback, but sometimes very bad and terrible patterns are happening to you, and which will put you in a quite a confusion. You don't understand that you followed the rules, you've done the right things, and it just doesn't work. And maybe so what I was saying, in the early years of my life, I was a very positive person, and this rule applied to me. What it's just like I was trying to be a nice guy, and I am, and it just seems like everything coming back to me. Sorry, I was just interrupted there. But anyway, the point that I wanted to make, and then you'll find a period in your life where things are just chaotic, and you're in this period, and you don't see any purpose. So my life lesson that I wanted to say is, a lot of times I believe you're going to find yourself in extreme situations, and it's just like the rules doesn't apply to you anymore. And I believe now that even in those periods where nothing makes sense, and you can't make sense of it, that if you look at the bigger picture, and either if you zoom in on it, that's what I'm saying, every day of your life is actually a pattern of where good things, where you have positive and negative influences, and you have good days and bad days. But the life lesson that I wanted to maybe encourage people is, if you find your life unexplainable, and the rules that you believed in doesn't apply to you, maybe it is because if you look back from maybe in a couple of years back, you will find some a pattern in it. Now, I mean, there is. I'm not saying it's always true. I'm really generalizing here, because if I look at my life, I mean, if I look at, for instance, my daughter, and being in hospital for in and out for 2 years, for many years, until quite recently, until I discovered this principle of randomness, there was no one that could give me a explanation of why these bad things had happened to me. And I'm not saying I found the answer, but what I'm saying, sometimes it could be even to death, and you'd say, I mean, if I look at my father's life, I saw him die terribly with cancer, and there was no way and he was abiding to all the rules that he believed in, and yet it was completely, I just could not understand it. But I believe that the influences that he maybe had on other people, and on me, or you don't know, you looking at yourself, but you don't see the big picture. And actually, I believe it's impossible to sometimes see the big picture. And but this has shown me that even in the worst situations where you find yourself, there seem to be a pattern generated about it, and sometimes you will never see that pattern. So it's just um, so I'm just saying, the most random thing that I can think of is life. And it seemed to me that sometimes you will look back at periods in your life, and it will take a couple of years, or you might never discover what the reason was. But it might just be, I'm just very generalizing here, because if someone told me this maybe when I was in that patterns, is not really what I wanted to hear, that it's my purpose to be in that place. So I'm really just saying, since I've been there, and who knows where my life is going to go. I just want to give this interesting life story that I discovered on my life about randomness. Oh, so yes, in this section I quickly want to talk about mathematics on markets. And that's basically what that other video clip was saying. It doesn't matter what statistical calculations you do on any market, that you will mostly find, for instance, here, if here I did a count of all this, by the way, is the statistics of my fractal, the Wave Fractal, but I've done it on many markets, and I think I've showed it before, that I've almost generated equal amount of green candles, and I've generated an equal amount of red candles. And this is what you normally typically found with any randomizer, and it just seemed like there is no pattern. The other thing that I did here I took the candle length. So if you take the lengths of all the greens as a minus, and the lengths of all the pluses as a plus, it comes pretty much to zero. And from a mathematical perspective, it would have proven that the market is going nowhere, that it actually ended where it started. But now look at this, and I've never noticed this before. that at the top this market started at a 1. I decided to be 1 to be my point where you start going up and up and down. And yet with this statistics that actually tells us the market is going nowhere, I've generated almost a 7% difference. The market here ended at 0.93, and if you started at 1. So what I'm basically saying, if you mathematically looked at the markets and you will say it's a zero-based thing, it doesn't go anywhere. I've just shown here that a zero-based movement generated a 7% difference, and I've played a lot with it, and I'll try to explain it later in the form of a wave, that you can get this and yet there's movement. So I'm just saying that you can't make a prediction. Just like I did before, I made some observations and I form an opinion about it, and it might be wrong. As I say, this video clip is more about my discoveries in randomness than to give you the answer to trading. As I said, hopefully I can give you that another time. Okay, so I've developed my own theory about randomness and odds. So if you have a timeline here, and it actually goes both ways, if you found yourself in randomness and you zoom out, or you look at it in the larger picture, you'll find patterns. And if you look at randomness is created by patterns on the smaller time frame that generates randomness. It's almost like a wave in a wave, or a wheel in a wheel. And so this is to do with randomness. But in general, I do believe very strongly that the higher time frames you going, you are basically increasing your odds, and the smaller time frames you are decreasing your odds. It basically comes to you shouldn't trade too close to the movement generator. So in markets, it's normally news events and things like that. And yeah, I might discuss it later, but I believe there's a big difference in trading Forex versus markets. Forex generates patterns, or there's news announcements quite often, or quite too often. So maybe you can find your optimal trading between those news announcements, and there will even be people that have trading strategies that will probably trade the news announcements. So I'm just saying, for each person it's different, but this is basically my theory of how I see it. So I'm going to try to go through these as quick as possible. I just want to give my opinion on. I took some principles and I looked at it, and I compared it with my fractal, just by looking at it to see if I can disprove them or show them on a just by observation. As I said, I would need time to do a more intensive research. So the Elliott wave principle, it's about the only principle or wave pattern that I could actually find on the internet. And just to quickly say, I'll show a couple of patterns. Yes, the 5-3 pattern is actually it seems to be above average, but I mean, just as you get 5-3, you get 3-5, or I'll tell you now more about it. But in general, up till now, I think this wasn't a bad job. As I said, it's actually the only one. As I say now, I believe my wave fractal, I would rather use that than this principle. And how many people have tried to use this and they get so confused where to start and where to end. So even if it's applicable, when the market is, when you're at a certain point in the market, you become very unsure if you've reached the top or not. So, but anyway, you can just have a look at that, and even if you don't trade indicators or anything else, if you purely on with trading without indicators, like on market movements, start looking at these patterns and see if you can pick up anything. But what I found, for instance, like here's a 1, 2, 3, with followed by a 1, 2, 3, 4, 5. So it's a reverse. I've even found patterns as 1, 2, 3, 4, 5. 1, 2, 3, 4, 5, 6, 7. So I found various combinations up to now, only till 7. I believe if I generate more, I will get more. So you get 1, 1, 3, 1, all combinations of maybe it's odd numbers from 1 to 7. It might even be prime numbers that it's generating. I actually suspect that you can get all combinations of prime numbers. In the euro US dollar, I only found up till 7 to be the highest, and all combinations of it. But if you take the average, 5-3 was a pretty good average. But as I say, it's just my opinion. Let's quickly go look at the MACD and divergence. I must say, from all the indicators, I understand now. So you see that the beauty about my fractal is that I don't have to. If someone tells me the MACD is magnificent and use it because everyone is using, I want to know that what I'm getting told is that I can see it, that I can prove it. And I must just tell you guys, I was actually quite surprised that the MACD, sorry, is a very good indicator. It does seem to predict a market change before it happens. But as I said, not always. I mean, if you got a pretty, if you're in a pretty random area, you will find a lot of places where it doesn't. What I did observe here that I do want to mention, it is you will get more false move if you looking at divergence on the histogram. Be very careful. I've found much more false things on the histogram than following these lines. So yes, let's quickly look at flag formations. We were all told that normally when you get a flag and you get consolidation, that it will be the same length. Yes, I found that pattern in my fractal, but then I found all versions of it. You get a small with a large, you get a large with a small, and the lengths, height. As I say, if you start looking at it, you will find all the combinations there. And while we're at the flag, I want to talk about consolidation. This actually opened my mind because I was told that consolidation is the bank that are accumulating money for a bigger move. And I'm not saying the banks aren't doing it. I'm just saying, think about this. We're talking about a pure maths function here. So I know the banks didn't influence my math function. Pure maths generate consolidation patterns. So it makes me think a lot what has been said, because I always wondered how would the bank. I'm not saying they never influence the market, but pretending to go down and then pretending to go out just to catch our guys out. Because if you look at this way, I mean, if you look at this down here, you would have probably sold there, just broke a previous low, and just as you sold, it's going the opposite, and now it breaks that previous high there, and there you put a reversal in, and you go top, and you think those bankers they are just messing me around, and this type of pattern seems to be very natural. And this is the reason why we all traders think that someone is watching your account, and just as soon as you do something, they start doing the opposite, and where they say that the bank is always on the right side and you on the wrong. I think that maybe the reason why the bank is on the right side is they're looking at the bigger picture, where you were looking at the small. So very surprisingly, just think about this: a mathematical function creating this confusing fusion to you, that it seems like someone is watching your account and doing this. So that this was very surprising to me. Okay. Trend line and channels, yes, it seems to be. But as I say, be careful. Sometimes it's easy and you can just see it easily. Sometimes you find places where it's hard. You don't know exactly where to draw it, and it seems to form all types of formation systems about it. But I'll show you some more pictures. I've even looked here at a middle line, so I'm not sure. It's hard to say, but trend lines and support and resistance. Yeah, trend lines are. Or definitely the channels. I mean, oh, the other very interesting thing I found about a channel: how many times have you drawn a channel and you don't know if you should take the closing of the candle or the top of the candle? And what this has learned me is that even in the perfect environment, not all three are always the same. So I'm starting to think that if you're starting to draw trend lines and channels that you sort of look at the average. So even here, like you could say, it's spiking out. Here it's not reaching the line. So even that formation is perfectly natural, and because I can explain it in terms of a wave. A wave, especially a wave in a wave, it's permanently bending. So somewhere this one was a little bit lower. So somewhere you'll find a formation where it goes a little bit higher. So some people were always looking for trend lines that are perfect. I'm telling you, they can be perfect, but most of the time not. So that was another very interesting observation. Okay. Um, See, here you can find one that, I mean, it's pretty close, you know, and as I say, sometimes it works on the middle line, and sometimes it goes through it as even if it doesn't exist. But in general, I believe the market, and maybe what I want to say earlier about consolidation on one time frame. Without it, you will not get a channel on the level above it, or maybe even below it. Consolidation is part of the reason why Forex works. If there wasn't consolidation, the whole market will fall flat because the guy on top you will suddenly find completely unpredictable patterns and he will stop trading. So without consolidation, the market can't work. It's just a comment that about earlier consolidation. Support and resistance. I've proven in my first, or I thought I've proven in my first video that any line can be support and resistance. So what I did here, I wrote the indicator to in this case I put the parameters of the indicator to draw me a support or resistance line when there's two candles to the left and two to the left and two to the right. And initially I found the same conclusion. So I'm just going to give you a hint here from observation. Yes, even this is day candles of my fractal, and when you do this type of things, you're going to find yourself in a position where it's just random and non-tradable. So even if I go from from a day candles here to 4 hours and I zoom here, I don't know if these lines make any sense to you, but it doesn't. But let me show you maybe what you guys should be doing or thinking about, or that I've learned now. Okay, that if you should look again at the bigger picture. So here in the day, all I did now, I put the parameters that it should generate 10 candles to the left and 10 to the right, just to see what it does. And so I'm just saying what I've been taught to do: two to the left, take a support and a high and a low is defined by two to the left, to the right. It's going to put you in serious trouble. I would say that was a very bad, wrong suggestion. I don't see that. But here, if I go to the 4, and as I said, I don't know what you're going to do with all these lines. I'm not saying it. I've shown previously that even randomness, if you look here on the small, I mean that one will pretty much go to that one. You will find a block there that are covered, that are coming down there. So or even these candles here, if you draw a line there, they form there. So yes, I see support and resistance all over the place. I'm just saying be careful to not make it too short. I mean, okay, what I've just said, here's an example. I've zoomed in there, and as I said, you will find a type of the market breaks a line, it forms something that typically almost comes. Sometimes it's perfect, but not always. So yes, I do see support and resistance, but I also understand now why I didn't find it. And that's why I said if you can put any line in. So anyone coming with a strategy that you should put lines at every 100 pips or 400 pips or anything, and you test it, it will test correct, but when you trade it, you'll suddenly find you lose money. Okay. Moving averages and king crowns, I was actually quite surprised that in my fractal I found, and it might be because I generated my fractal based on the averages of certain markets, that on one time frame this forms a perfect way. For instance, this moving average, and if you look at what I did is I played with the MACD and I set it to a place where it gave me more perfect patterns. So basically, who knows, the default MACD that you're using is good. It's not maybe optimized. I believe I can find more optimum settings for the type of market that you are trading in. So if I just go to the next line, I just now went to a different time frame, and now suddenly my moving average, I have to change its parameters to be smooth. And here now the MACD suddenly started. I mean, the previous one was much nicer, and now you're starting to find, not that this really matters. I'm just showing you the principle. Fibonacci. To me, this was the biggest surprise. I said before that I don't know how you're going to trade Fibonacci, and I couldn't understand why I can't get the Fibonacci to work. I was expecting perfect Fibonacci because I've generated a wave and a wave perfectly, and I'll explain to you now why. But let me first show you a picture. So obviously, I'm not saying that it doesn't work at all. I'm saying you guys can use it and you can look at retracements, and each one you can form your own opinion about it. I'm just saying be careful, and I'll tell you now why. Let me show. So here I tried it there. I've tried it there, and yes, you can argue that it's some maybe working. I don't know why I got this line here in the middle, but anyway. So now I tried it from there to there, and make your own observation. But it's not obvious, you know. It is not obvious. And the last one, yes. Did I go back now? Yes. Okay. I'm gonna give my opinion why the Fibonacci didn't work so nice on my fractal. And I believe the reason the Fibonacci is a very well-known system, and it basically are telling me that if you are a carbon-based organism or human or whatever, the Fibonacci, and this brought me back to atoms and thinking about it. If you look at the DNA of living organisms, where you find the Fibonacci work, that you'll find in their DNA, in their atomic model or level, you will find that the Fibonacci structure is working because they are, let's say, they are carbon based, or they build out of certain atoms or models or molecules that represents Fibonacci. So I'm not saying the Fibonacci doesn't. I'm just saying if we were trading somehow a carbon based thing, then that's building blocks is based on Fibonacci, like the human body, then you would have found it worked perfectly. But now, I mean, even if I think about it, I went to the euro US dollar. I took the average of every time frame, and I looked at it, and the average over whatever those ratios are not Fibonacci. So that's my conclusion. You're trading a human if you're using Fibonacci. Be careful. And I might be wrong, but that's my personal opinion about Fibonacci. Yeah, I just want to show you guys. I even wrote the indicators to give me like a cross or indication of when the news announcements is going to be, and then to try to work out something. But as I said, it depends on your trading strategy. I'm saying maybe if you do trade on 5 minutes, you must know exactly when the next announcement come, because if you form your patterns on smaller waves, and suddenly you hit by a big one, you're going to be in big surprise. You're going to have a big surprise. Oh, and then no one has ever told me. I have picked up this weird, funny thing by looking at many YouTube clips of traders and professional traders and people who has made it. And I don't know if I'm wrong, but it seems like most people who does it professionally likes to use markets. Trade on like a say a Google or whatever, you know, that they trade a market and not currencies. And this brings me back to the principle that I was talking before, that maybe markets, because they don't announce for announcements every day, that the average, I believe the average of the candles are more standardized. Now the problem with trading markets in my platform here is because it's multiplied the movements. You basically have to be a day trader. Unless you go to very high time frames, and there it also looks funny. So I just want to make this observation, and maybe think about it when you look at YouTube. Why it seems like the most professional traders are not trading currencies. They're trading a company that they can do a long-term prediction on. And so basically at the moment now, I would say that is maybe the way to go. Okay, let me just show you Forex here. You've seen these candles; they're also different in size. But if you typically on 5 minutes in currencies, you will find small things, huge things. So the waves are constantly changing its height and its frequency. And so just keep that in mind. So basically, I'm trying to tell you that that is one of the reasons why I believe your odds increase if you go to a higher time frame, because the more higher you go, the more smooth and your candles are. So just to end off here, as I said, this fractal and the wave pattern that it's forming, and led me to look at atoms. And as I say, one of the other reason why I want to look at atoms is that in the beginning I couldn't understand that my randomizers all seem to be in sync. It doesn't matter, because I thought that maybe because all of them are generated on a computer, that they're using the same atomic clock, and it doesn't matter what computer system, what randomizer you use, you came to the same. But I now believe, as I said, even with life is random, and human thoughts are random, and yet markets aren't a perfect wave. But this led me to the next section, and I know it's nothing to do with Forex from here onwards. As I say, one day I'll come back to this. You must also realize that this fractal, I've only basically uploaded it finally into my platform about a month ago, so I really had no time, and I had a lot of things to do, so I really had no time to really study it. So that's why at this moment in time I could just give observation, but it did change my viewpoint. It did already start telling me something. So yes, I'm just saying. I also saw a relationship between Forex and the various time frames you trade. A relationship between the movement of electrons in an atom. And you might think the next video is going to be complicated. I'm going to show you the amazing discovery, which makes this one look like nothing, that I've discovered. I've basically figured out something that apparently no scientists in this whole world for the last 50 or 100 years or whatever could figure out. And just because of the thought, the way that I saw my fractal. So if you, and I'm telling you, you only need normal, if you can count to 10 and know something about planet movements, just orbits and plus and minus from magnets, please try to follow me in the next one. I bet you will be more interesting than this one. Well, that's it for now. Thank you very much. Bye.